Welcome back to Building a Market Narrative. This is a continuation of the previous video where we utilized the weekly chart to determine what was the weekly draw on liquidity or the weekly point of interest. And that works two ways in terms of where may price be looking to go, right? That's at, like, let's say the beginning of the week to the middle at some point, right? Potentially, as well as where may price be seeking to go by the end of the week, right? And what I mean by that is here we have this is last week price. This is a bullish candle, so that means price opened up here. Somehow it pulled down here, so you have an open low. It ran up here at some point, created a high, and then pulled back and closed right here, right? So we highlighted previously and we made some adjustments. So we have this right here is considered a volume imbalance. Volume imbalance. You get to highlight that. Make that blue. That's just what I do, like a light blue. And then we also have this this fair value gap here, this inefficiency here. You can highlight either one of those or both. Gears, whatever works for you. I think yesterday I just grouped them together, like, you know, kind of like this here. But, right. And then we also have a volume imbalance right here. And you can see, right? So the price opened up here and then it fell down here, right? So technically it showed a willingness to go lower. It violated this bearish, this bullish fair value gap here and traded into this volume imbalance, right? And then pulled up into this volume imbalance and then pulled back down, closed here, right? So that's what I mean, like, right? So this all happened in 1 week. All this was a weekly objective, and also this was a weekly objective. Then I skipped the daily chart, went straight to the 4-hour, and this is very noisy. This made me really anxious. This is easy. I'll start over. A lot of noise here. So just gonna be quiet and just do what it do real fast, right? Yeah, I know I got anxious, man. My legs started jumping. I'm like, nah, you gotta get up out of here. All right, so this price ran this high, price ran this weekly high here, then it dropped, right? So what's this? I had no choice but to. That was crazy overload right there, boy. All right, we don't need noise. The motto, the current directive is to do less better, right? And to keep things simple and light. There's no room to be extra, really. All right, so we have this previous week's high, another previous week's high, volume imbalance, weekly volume imbalance, another weekly volume imbalance, a weekly bullish fair value gap. Price closed below it, then we would have considered lower prices, but it didn't. It reclaimed it, so we would consider going higher. Go to the 4-hour. Okay, so what we didn't do was highlight the previous week's low, because that was rated, right? All these weekly lows were rated. This one didn't. If you wanted to be really granular, you can this wick into quarters. That's this wick here. And then you can see that's another opportunity. I didn't discuss this yesterday, but right. So we have the 50% price held above 50% of this wick, and the model calls for treating wicks like gaps. And this is also a balanced price range here. This is only imbalance here. So price stayed above, dropped below, and stayed above 50%. What else? We didn't highlight this swing low. Make that red. And then we go down for our chart here. That's good enough for now. All right, so here's this low. It's just cleaning up the chart. This is the process. Like, so regardless of what, it's still to try to make this look clean. I'm gonna delete this and put it back because I don't feel like I'm gonna just. All right. Okay, this is a little bit better. Very neat. And we know everything on this chart right now is our weekly levels. We kind of dropped. We kind of also highlighted that this was a measured move. Then we also have the 3 drives reversal or climax pattern, 3 drives pattern, indicating that liquidity was taken, even if it didn't rate this low, for example. Then this 3 steps down is indication that enough is enough, and to start looking for a potential mean reversion setup or potential pullback, right? And we also mentioned that even though these were weekly levels that we are now in the 4-hour chart, we can actually start to utilize discount. Let's just use this discount, the premium. This is the range, the high to this low. And we're looking for price to go above 50%, which is right here. So PD rate above 50%. This was legit short. It's also this fair value gap here. That's what I mean. Above 50%. It's this bearish fair value gap on this 4-hour chart that coincides with the weekly volume imbalance. And then so you have internal range, and then in the target, these relative equal lows would be the next target. So internal to external, right? Back to what? Internal. This next fair value gap here, back to external, and then we get into another game. So let's see if we can. So I want to fine tune things a little. Doesn't make sense to take this out. We can leave this here. Leave everything here. Last time I deleted it. We're going to leave it so we can just go ahead and get into the weekly, the 15-minute chart. And we're going to label these 4-hour ones because we need to distinguish them from the weekly ones. So that's one. This also held price lower. And we had another one here. Really don't have to highlight it because we're going to keep the weekly here. just for identification purposes. This is the previous week. You can actually see why that's relevant. Right. So, all right. So we're going to move straight into the 15-minute chart and not drag it too much. All right. So like, why is this colors here? We're going to delete that. That's the, all right. It's relevant still. So, all right. So we think about Monday, right? And remember, this is also a weekly. I know you can how do you do that? Let's see. I know I can. All right. Now I'm just going down a little bit down the rabbit hole because I know you can. There you go. So I just clicked. I don't know why it didn't allow me to do it on the other time frame, but you know, put it on the 50. So this is midpoint or consequent encroachment of a weekly wick. Okay. Where did it go? Playing around. Did I make it to? All right, it's back. It's too far out though. I can't see. That's what I try to prevent, but whatever, man. It's my last. That's good enough. All right. So we see everything. It's the weekly wick. These blue areas are the Asia high, Asia low. Relevant to me, relevant to my approach to the market is the midway point of the Asia range and utilizing the Asia range throughout the trading session. And the Asia range in conjunction with previous Asia ranges, right? All right, where are we? All right, so let's see. Do we have a setup for Monday? Utilizing these the same information. All right, so Monday opens here. No, it doesn't open here, but this is Sunday's price action. This is Monday. This is the 9:30 opening. This is the New York session. So that's why I said that. But anyway, when it opens up, we are have a slight run below Friday's low, which is the weekly low as well, I believe. Anyway, what range is price in? Price is inside of Friday's range. That's this high to this low. So ideally, we want price to go above 50%. You can use this high, or you can use this high, or this high. And probably wondering why would I use that high? My form fitting. This is the one where the price started moving. This is where the displacement started at. You can either do that one or this one. I would be comfortable doing this one here. All right, so this was indeed a legitimate short here, right? So we had a run on stops, had a relative equal highs. This is the market structure shift for this setup right here. Market structure shift. Just put that as 2, make it black. Let's go ahead and label it market structure shift. Right, and I dragged it way out here, but it's really relevant for right now, right here, but it's still significant. All right, so could have got in here, balanced price range. We have a bear bar inefficiency, right? And we have a bull bar, also inefficiency. Here's the entry, stop loss is here. It's the same price, probably would have got stopped out unless you put it a couple of ticks lower or a point lower, whatever model you have for your risk management. But anyway, you got stopped out. You see price go back above the market structure shift here. So that was one entry, but I'm highlighting this entry here after the market structure shift into here. This is during the Asia session, obviously. This here is like during the London session, and then it proceeds. It doesn't move until here, right? So that's one entry here, one entry here, and ideally targeting this high. Didn't do that. Price opened up, ran this high, violated this bullish fair value gap. This, right? Ran this high, ran this bullish fair value gap. This is an entry short. Here. Right? Because it was bullish, violated. Here's your entry, 11:45. Another entry here at 12:15. And sometimes for this approach, it's really that you have to trust your model, because if you don't, why would you allow this to come back up here, right? There's an order flow here showing that it's bullish, right? But the dominant order flow is bearish. But yeah, you have to trust your model, trust your setup. Stop will still be up here. You have more than one contract and you enter and you'll accept that, hey, this bullish fair value gap here, honestly, on this time frame, I wouldn't even look at this, right? I'll just know that it's there, but I wouldn't look at it. I'll be looking at these inefficiencies on this time frame to see, is it going to support price or is it going to push price higher? And let's just do that, right? And you can see, right? So here is your entry, second entry, right? And you see price consolidating inside of here. It ran this low, still consolidating. It violated it here. Here's your entry. Here's your low risk entry. But all of this, right? Taking out these lows. So there's a question that I would have is, okay, right? So now price, we can take this off and put it back on. I'm somewhere else. So we have here this swing low to this swing high, and you're looking for price to go below 50%. So it went from premium to a discount. So now you should be leery, should be more aware. All right, what kind of held price up over here? So there's a key level here. And in this case, is this swing high? Or you could use this inefficiency here and drag that out. But is this swing high? Price couldn't have forced breakout, reclaim, forced breakout, reclaim, retest, then took off. came back down, false breakout, reclaim, pull back, push higher. So this is a key level. And again, myself personally, I would actually highlight this, both of these fair value gaps, and drag it out, because I trust that more than I trust this level here. So I'll delete that. And yes, I did group two fair value gaps together, because I don't have, clearly you can fine tune it and just use that. But you can see price never came back all the way back down. In which case, and why am I using both is because of this. Because of this bearish fair value gap here. So balance price range down here. This is also part of why this is also balanced as well. So I wanted something that encompasses the balance of this candle as well. Wow. I didn't want this video to last too long, but it is. All right. So, what was the weekly objective? This volume imbalance. That's your optimal trading tree long here. Optimal trading tree long, 70.5 if you like, 61.8 if you don't want to risk missing the trade. And I'm also certain, almost certain, that there was a SMT divergence between NQ or YM or something. But honestly, for me, looking at too many things becomes noise, becomes a distraction. So I don't really I don't practice SMT divergences, and I'm not as great at it as everyone else is that do use it. Everything that I need in general is on the chart. All right, so we have this high really as a target, relative equal highs, have a small bearish fair value gap, but really traded into this weekly volume imbalance and then dropped, violating this bullish fair value gap. There was enough reason to continue lower. Also violating this again. There's another reason to continue lower. So you can technically ignore this. I don't want to say ignore it, but it's in my way. It's relevant, but I'm gonna take it off. Where is it? I don't. All right, so these ones I drew on the 15-minute will be enough for me. I know that exists. I know that these 15-minute ones exist. So technically, this is the higher time frame for my day trading strategy, but it's also good enough as a trading time frame to keep me calm during the trading day if I needed that. But yeah, so here's your optimal trading tree long. Boom, took out the high into a weekly volume imbalance, so we can take that off. And that goes back to the previous range that we were looking at. Pretty much Friday's range. I'm not looking for accuracy here, just more just like in the way. All right, so pretty much this low and this high, often trading tree short. And that's what we have to the negative 62%. But that's right into this weekly volume imbalance again. All right, and still, you can still see, all right, the question is support and resistance. What held price up? Boom, boom, what held this violated? What displacement will help price down? So this is violated. Then keep tracking it, right? Because why not, right? What held price down over here? This is a key support and resistance level, an inflection point. So price bust through here, consolidated above it, retested, reclaimed, and it's still doing that right now. All right, so we have this one trade. We have this second trade that's associated with the Friday range. brandy stops. And also we already acquired a higher time frame weekly objective objective. So we saw another weekly objective here. Okay, consolidated here, really needs it. Now we can do the same thing in terms of discount premium. All right, so this was legit to consider this long, but this into here, push higher. So we're thinking here about 50%. This created another price range. That would be this high to this low. So it pulled back below 50% into this bullish fair value gap and then took out these relative equal highs. In the Asia session high, Asia session range, really. So all of this is here. All right, so then we have took out this high, dropped. This have this small, it's not really small, but this bullish fair value gap violated. Here's your entry short, target in here, next target. All right, you can pull this fair value gap out here and you'll see that price did bounce. It did bounce in here and then it violated it. Took out the previous day's low. And then we have a push higher inside of this weekly volume imbalance still. So it traded below it, reclaimed a consequent encroachment, good enough to consider going long. We have this bearish fair value gap, reclaimed inverted fair value gap, push higher. We have a market structure shift. I really don't like this as a market structure shift, but this is a change in the state of delivery, the inverted fair value gap. Which one would I like? I would prefer this one or this one, but so that's fine, right? Push higher, and the reason why I prefer this one or this one is because of this gap, right? So once this is broken, then we have that nice retracement here. So we have another optimum trend entry long after the market structure shift, after price traded above the Asia range. Retests this small dotted line that you can't really see because everything is blue, but this is the halfway point of this Asia range. Price is unable to hold below it, and we have optimal trend entry long, and concludes the next day for one standard deviation. All right, so that's Thursday. That would be Thursday, and this was a weekly fair value gap, and you can see price push here. You have the 15-minute overlap, push higher, reclaim this previous one. We also have to think about, again, discount the premium. So we're going to take that off. We have here, remember this is a bullish weekly fair value gap, so that has some significance. So we have this low to this high. You have a pullback below 50%. Not optimal trade entry, so you probably would miss this entry here. It's during a London session as well. And in general, we don't like long wicks though, but all right, so you would miss this entry if you just trade an optimal trade entry, but discount premium. This is below 50%. It isn't a discount. And you have this small fair value gap here. You could consider that reclaiming this level, the midway point of this fair value gap, a reclaim bullish fair value gap, to consider trading above the Asia range. And you can see price holding above the Asia range and then violating it, right? So then we make that adjustment here, still dealing with this low to this high. This low to this high. And so we have a run on stops. We have a market structure shift right here. Again, because of this and because of this, goes down into this bullish fair value gap and then pushes higher. And in that case, we will make that adjustment here and here. Blue trade entry. We can drop to a lower time frame if you wanted to for that one, because it is a tighter range, but everything's there. See this high or this one, and that's your pullback, and that's your taking out these relative equal highs. Then we have a pullback again, and this is a balanced price range. Bear bar, bull bar, trading back into here, and this is why you get this like push higher, but still it's in a consolidation. There's no catalyst to push it higher. I don't know. No, that's all I got. I don't know. I had to like push through this right here after a huge run like this up. Can't really. So yeah, still looking for price to kind of trade into here or retest here. That's all I got, man. You guys have a beautiful trading week. Stay dangerous.